to give a very brief about Mainstage, I'd like to ask Debashish to come up and speak about what we do at Mainstage and how it started.
Thank you so much, Sumis. Thank you. Welcome, gentlemen. It's in the afternoon in Australia. It's morning in India, and people coming in from. We have a couple of startups coming in from Germany, so it's 8 o'clock. So we are like having a real global event here. Welcome once more. Mainstage Incubator was founded a couple of years back between me and my co-founders and CEO. He's based out of Frankfurt, Sven Wegner. I was expecting him to join, but it's really early out there. What we do is we started off by creating innovation bridges between India and Germany, which slowly and steadily over the last 2 years has become a global mesh of innovation ecosystems. So what we typically do, why do startups come to us? Startups come to us for 3 reasons. One is sales and business development. That is one of our key focus areas for startup, which not many people are offering. The second is fundraise, and fundraise is where we also invest, and at the same time we also work with investors to help them invest in high velocity startups. The third is ecosystem support. Ecosystem support includes multiple countries. We are today, we started in Frankfurt. We have got our own office in Melbourne and being managed by Dr. Chris. It's really doing extremely well, and we are thankful to him for being on board with us. We have got partnerships in Japan. We have got partnerships in Sri Lanka, Saudi Arabia, US, Canada, Latin America. We have entered through Argentina. What we do with our partners, 2 kinds of work models. We work with them in investing, helping our startups to raise money, and at the same time, helping they are more of a foot on the ground on the local ecosystem. So to give us a lot of local intelligence around opportunities for our startups. We have about 22 startups in our portfolio today, and all of them are in the tech space. We are a tech focused hub. Along with what we offer, we also have a media house where we help startups to build their business, promote their business onto that platform. We also have a tech support team, which is based out of India and Sri Lanka, helping them globally across multiple needs as and when they come. We also offer multiple soft landing opportunities across various countries, including Australia, Germany, and Canada. So this is what we do. And you will see a very interesting mix of matured startups today. And welcome to this world of innovation. Thank you so much for being here.
Thank you, Debashish. Before we move ahead, Dr. Chris, I'd like you to come up and say a few words about the expansion of MSH in Australia and your role and how this event has been successful because of you. It's going to be successful.
Thank you, Sumit, Debashish, and everyone that's here. When we started our discussions with Mainstage, we were very much involved in several startup companies in different parts of the world. So we thought, fantastic, let's connect with the European through the German experience. What we realized very quickly is that Mainstage is not your traditional place for a startup. It's a place that not only creates, but also is interested in revenue generation, in leveraging its international relationships, including us, but testing the market, obtaining revenues, interacting with investors, and looking for high acceleration and high access to markets and valuation. So that intrigued us because even in Australia, I don't know anyone else who does this. So for us to have partnered with Mainstage is a big coup, but now it's not an us and them, it's a Mainstage. And what impresses me with the companies you will hear from today is that their fit into the market is unique. A number of them are making money. A number of them have major clients. So you're getting access to products, companies, and leadership people that the rest of the market is not seeing. And we've been quite selective to make sure that we don't advertise this across the country, but to enable and pinpoint relationships such as with yourselves to take these out. So these companies will grow exponentially very quickly. I'm just very pleased that we have the opportunity to have introduced these to you for your consideration, as we are very excited with them as well. So thank you, Sumit. Thank you everyone for attending.
Thank you, Dr. Chris. So we are not going to take much of your time. I'll quickly let the startup know the amount and the rules, the amount of time that they have. So you have 15 minutes in total. It's up to you if you want to pitch for 12 minutes and take less questions. That gives you 12 minutes to pitch and 3 minutes to take questions. Or you can wrap up your presentation in 10 minutes and take question answers for 5 minutes. We have Sagar and Pavan from ProNX. ProNX is a retail startup. Meanwhile, can you start by presenting your slide, Sagar?
Yeah, I think the screen sharing has to be enabled.
Yes, Vaishnavi. Thank you.
Yeah. Okay. Let me know once you're able to see and we can get started.
Yes, can you do the slideshow so that I can start your time?
Yeah.
Perfect, your time starts now.
Great. So my name is Sagar and I represent ADIP. ADIP is a retail digital experience platform, and we focus on transforming last mile retail experiences. First, let's talk about the need for such a platform. Imagine you're in a large retail store. How many times have you visited a store, shopped for about 45 minutes, and then waited in a queue for another 20 minutes? And because of COVID, we no longer engage in window shopping. So when we're walking into a store, we're looking to buy something. And when I realize that the product I'm looking for is out of stock, I walk away with an unpleasant experience. Although that product may be available in a nearby store, because of the lack of integration, it's a lose-lose situation for both me and the retailer. And in spite of being a regular shopper, how often do we find ourselves in situations where we did not have all the right information at the right time, as we were shopping? So this is where ADIP comes in. We offer a B2B enterprise SaaS platform to address these very problems in last mile retail. And we have identified 5 broad areas, and we'll go through each of them. Scan, pay, go. This refers to the checkout process. Typically, as I was saying, we see lengthy queues up at the cash counter, and the time it takes to scan the items, explain the discounts, accept payment, and print receipts from this typically bulky POS system is high, and it leads to longer queues. So we come in here with solutions like the mobile POS and the customer self-checkout, where we can completely eliminate the need for a traditional cash counter and speed up the checkout process for each customer. So customers can just scan, pay, and leave from anywhere within the store and no longer need to queue up for checkout. Then we talk about the omni-channel. Typical challenge in retail is that each of the sales channel is treated differently and independently. Whether it's the store, whether it's the e-com, whether it's a mobile app, and so on. And because of this, the retailers are not able to leverage each of these channels to provide a seamless experience for customers. This is where we talk about synchronizing all the sales channels of the retailer and providing a unified brand experience for the customer. One example of this is Endless Aisle, where if your favorite color of t-shirt, for example, is unavailable in the store, customers can still place the order for that shirt right then and there because the inventory is synchronized across a nearby store. Another part of enabling omnichannel is offline to online conversion or vice versa. And this is becoming more important and relevant for smaller retailers who cannot afford to set up an e-com store. So an example of how we do this is allow a retailer to send out a simple link with the catalog to their customers. Customers can place the order, the store delivers the orders to the customer's home, customers happy, and retailers happy because they got a simple solution. Then we talk about engagement, which basically boils down to how the store communicates with the customer. Is the store sending the right messages to the customer at the right time? Because most often, we receive promotional and marketing messages either at the wrong time, when we're in a meeting or when we're driving, or we get the wrong message, something which is unrelated to what we actually like. So we come in with a proximity-based, contextual and personalized content delivery mechanism. So we deliver messages to customers who are already in the store, which means there is an intent to buy. Moreover, we can even identify which aisle the customer is in and send out the relevant messages. And since we use the customer's preferences and their shopping patterns, we make intelligent recommendations instead of bombarding them with irrelevant information. So say if you like to buy shoes and you're walking by the footwear aisle, you will get a notification giving you a 20% discount on, say, the Nike brand. Merchandising. Here we talk about the placement of visual merchandising in the store and products on the shelves. Very often we see scenarios, I discussed earlier, is the product you're looking for is not on the shelf, or even if the product is available, the size or the color which we want is not on the shelf. And typically the stock would be available with the store also. It might be in the warehouse or a go down nearby, but that immediate sale is lost because there's no product on the shelf. So here we empower stores with triggers and alerts and information of when and how frequently they must stock their shelves based on variety of factors. It could be the sale patterns, which day of the week it is, which season it is, and what is the demography of the store area, and so on. So if a shelf, for example, is capable of holding 10 pairs of jeans, on a weekday we would trigger an alert where, say, 2 pairs of jeans are left on the shelf, and on the weekend we can trigger it when 3 pairs are left because the products are selling faster. We're also able to provide a customer heat map to the retailers, which allows them to make informed decisions with regard to how to place the products and the advertisements within the store. And this can help them, determine how they should price their shelf and their advertising space, and also how they should plan their store layouts and the planogramming which happens in retail stores. Finally, we have the analytics and the insights across different areas of last mile, such as, you can have channel specific insights, cross-channel insight, the sale patterns, demography for different stores, customer purchase patterns for, different regions, what are the top selling items during different seasons, and the list goes on. Talking about the market, the size of the market is close to $50 billion across the areas that we just spoke about. And talking about the competition in the market, as you can see, while many of our competitors do have the basic POS and omni-channel capabilities, where we differentiate ourselves is by offering a more end-to-end last mile retail solution. Talking about why us, the platform is a solution that has matured across the past 4 years. We're deployed in more than 700 stores now globally. And because of that experience, we have been able to standardize our system and our APIs to integrate with the existing systems of these large format retailers, which means minimum change management for our customers. Also, our platform is built on a microservices architecture, and that means the customers are able to pick and choose which modules they want as they require. And this flexibility we offer not just in terms of modules, but also in terms of deployment options. So if we could deploy it on our cloud, we could deploy it on the customer's cloud, and even on-prem or any combination of these deployment options is possible. And as a startup, we are highly value driven when compared to some of the larger players in the market, and the SaaS nature of the platform brings in an additional advantage in that sense. And like I said, our agility combined with our experience, it allows us to have a very quick time to market compared to the other players. Talking about the strength of the team, Pawan, our founder, he's a serial entrepreneur with 4 prior successful ventures. He brings about 30 years experience in the retail domain itself. Rajesh and Sanjay form the board of directors along with Pawan, and they each bring their rich experience in fintech and retail to the table. They are actively involved with the business as well, be it sales or the funding activities, and they enable us to reach key people in the industry and open doors because of their network. Vikas has recently joined us as the head of delivery and projects, and he brings technology and team management experience, while I'm involved with the business operations, which includes interacting with customers, partners, investors, and ensuring business growth. Talking about the traction, our platform, as I mentioned, is live in more than 700 stores, and our platform has handled close to $110 million of transactions so far. And we have deployed with multiple large format retailer outlets across India, Australia, and New Zealand. Our most recent customer has been Kmart, with whom we deployed the solution completely remotely during the COVID lockdowns and within a record time as far as their nationwide rollout is concerned. This is our way forward. While our focus has been on enterprise retail, we are now including the SME segment in our focus, and this is a game of scale. While we are already in conversation with some major players in Southeast Asia and Middle East Asia, they have a wide network of small retailers who they can take us to. And by the end of next year, we also have lined up to launch the RDEP Capital, which would basically serve as a buy now, pay later type of platform, which allows retailers to lend credit and offer greater benefits to their customers when it comes to payment. And here you can see the revenue growth plan backed by strong pipeline of customers that we have globally, and we have depicted the planned revenues with and without the investment. Talking about the investment, we are looking to raise $3 million in this round, and we mainly plan to utilize the funds to improve our sales and marketing efforts worldwide. We're looking to scale it up rapidly now, and entering the SME segment does require some kind of infusion for us to scale that rapidly. And of course, for key hires who can take care of some of the departments that we're focusing on. We're happy to take any questions now.
Thank you, Sagar. That was spot on time. Investors, do we have any questions for Sagar and Pawan? We can stop sharing, Sagar, if that's okay.
Sure. Thanks.
Do we have any questions for Chronix, RDEP? None.
I'll probably just start up.
Sorry, you might have covered off on this.
George, okay, go.
Yeah, sorry, you might have covered it. But how do you actually charge for this, for the service?
Okay, so what we have as a revenue stream, there are two revenue streams primarily. One is, of course, the license, because it's a B2B enterprise kind of a solution. So there is an annual license what we have. So we typically have a multi-year agreement with the customers. So like, for example, Kmart, as Sagar was mentioning, is a 3-year agreement right now for some of the solutions which have been deployed going live for the past 8 months now. The second revenue stream what we have is the services part, as in because it's an enterprise solution, there is a lot of customization, there's a lot of integration which needs to be done, and it's a continuous process because the retailer invariably comes up with a new payment mechanism, a new loyalty provider, or maybe they shift their CRM from one provider to another. So as an integrator, as a last mile provider, we will need to kind of integrate with all of them, and that's a services model which will give us revenues very consistently, and that's been happening both in the customers we have in India and also in Australia. So these are the two revenue streams, but moving ahead, we also have a few other revenue streams for the self-checkout, which Sagar was mentioning. The self-checkout is a mobile app, used by the customers walking around the store, picking up items and, building a cart and doing the checkout. When they do that, it's very difficult to kind of assign a license to the number of devices used or the number of users using. So what we do is we would charge them a operation percentage, like an OPEX model. What we do is we say, okay, maybe pay us about 0.5% of the transactions which go through our platform, because they anyway do pay the payment providers. There are certain bits which are paid to the payment provider. We add on to that and say that we will handle everything and you will pay us a 0.5% or a 1%, depending on the kind of payment used, the kind of modules used, and stuff like that. So that's the third revenue stream, which has just about begun, but the first two are already in place.
And what sort of margins do you make on those different types of transactions?
Well, so license obviously is apportioned across customers. The product development keeps happening, but typically we work with 30 to 50% kind of a margin right now with the enterprise sector. Once we get into the SME sector, which is the mom and pop kind of a segment, obviously the margins will go down, but that's a game of scale, as Sagar said, and it's about achieving really big, large numbers, where probably we would be working at 8 to 10% kind of a margin.
Okay, and just one other question, just on the data, obviously it goes through, who owns the data? Where is that kept?
Well, that's a very tough one because of the privacy laws and stuff like that. Yes,
Yeah.
the data is with us. I mean, it's on our cloud primarily, and we are allowed to come up with different analytics on that. So we are building some AI engines for different stuff, and we will come up with data. But whether we are allowed to sell that data to others is very ambiguous right now. Some of the customers talk very specifically about it. Some of them are very ambiguous and they're like, it's okay, you go ahead and do things. But yes, but ethically, I don't think we will be allowed to use very specific data, but we can always generalize, and talk about the trends in the market, in terms of what kind of products are selling, what are the time slots, where maximum sale happens for a particular product, things like that. So those things, those trends, I mean, we are very much in control, and we have that, the ownership in a sense.
And you've got some pretty strong security around that?
Yes, I mean, again, it's because it's an enterprise thing. Even before we go for even we close the sale, before we close the sale, there is a lot of discussion around security. And their security team is involved, and every gap is plugged. They ensure that, and of course we are now getting into some kind of certifications ourselves as well, so that we are able to give that comfort and confidence to customers.
Okay.
Pawan, why don't you take the Kmart Australia as a case study in terms of security?
Yeah. So yeah, in fact, that's for us one of the very interesting case studies. Primarily, as Sagar said, it was done completely remote. So we started this project sometime in May, June last 2020 during COVID. They were looking to kind of come up with a mobile POS solution for them because of COVID, all the social distancing norms. So we were competing with about 13 people globally, included Microsoft and Toshiba, and quite a few other big names. And then, of course, I think after a lot of technical rounds of discussions, we were shortlisted to work on a POC. But it was really good the way things were going. Even before the POC got over, we were asked to get into the pilot. And when we started the pilot, even before we got done, they said we will roll out nationally. And then during that, they said, okay, we will roll out to New Zealand as well. So it was a brilliant experience for us. We were remote here in India. They were remote out there. I mean, they were not even able to come to the office. We were not in the office. So all of us working from different regions. So that kind of gave us a lot of confidence. We used to talk about it, that everything can be done remote, but we actually proved with Kmart. And then that was really appreciated by Kmart, and that's the reason they signed up a long-term contract with us. So yes, Kmart is a very good experience for us.
Thank you, Pawan.
Yeah.
Thank you, Pawan. Thank you, Sagar.
Thank
you, investors. For any next level of interest, to reach out to us, we'll contact you, and you can let us know if you'd like to continue the discussions. Thank you, Sagar and Pawan. Thank you for being here.
Thank you so much. Thanks a lot. Thanks, everyone.
Bye-bye.
Hi, Amit. Can you switch on your camera, please?
Hi, hello, everyone. Good afternoon.
Hi, Amit. Good afternoon.
Hi.
So the next startup, dear investors, is CViz. It is in the HR tech domain. And sorry. Yes, Amit. So we have 15 minutes in total. It's up to you whether you want to pitch for 10 minutes and take the questions for 5, or pitch for 12 minutes and take the questions for the next 3. Can you hit this slide so that?
Yeah, just
start your time.
Wait, give me 5 seconds. This is actually the banner isn't going up for starting this session. Okay, I'll start with that. You can time me. You can start.
Cool. We'll start now.
Okay. Hi, everyone. This is Amit. I'm the co-founder of CVs. CVs is an AI recruiting platform. It's AI recruiting software that help companies hire top talent faster, right? Now, if we just talk about hiring in general, right, it's one of the oldest function in any kind of companies, right? Every kind of company, every kind of industry has been hiring for decades and decades, but we still struggle today to hire top candidates faster. And why would that be, right? The question is why we can't hire, this candidate faster. Now, when we looked into these problems, there are various problems. There are various reasons behind this, why we can't hire faster. And I'll just talk about a few of them here, right? The first problem is we are living in the market, a recruitment market that is candidate driven. It means that a good candidate is off the market in a matter of few days. Okay, so we have to reach to the top candidate before anybody else does. But then why we can't reach these kind of candidates faster? Okay, the reason behind that is very simple, because we are looking for candidates not in the right place. For example, if we just talk about hiring, it's essentially not just hiring, it is kind of marketing and sales. You're trying to market your jobs, you're trying to sell your jobs to a candidate so that they can join you. But have hiring evolved as that of marketing and sales, right? For example, in case of marketing and sales, we can target right candidates. We go after right customers. We have the persona and we target them, right? Do we do that kind of things in terms of marketing? No, we don't. And what I mean by not going after the candidates at the right place, right? Just to explain that, I'll talk about certain changes in the recruitment world, right? We are looking at Generation Z, right, which is also called as an internet, generation. And by 2024, probably more than 50% of the workforce will be Gen Z. And Generation Z, you don't find them on typical job boards like Indeed, Seek.com, or LinkedIn. Okay. For example, if you want to find good programmers, they are not on these platforms. They're rather on GitHub or Stack Overflow. If you want to hire good designers, you have to go to Behance or Dribble, right? People have their own blogs. They write engineering blogs on something like medium.com. They have their own website. They want to showcase their work. Generation Z wants to work as a freelancer, right? Rather than full-time employees. And why I'm talking about all these things, I'm just trying to emphasize the changes that has happened in the recruitment space, how the candidates have evolved, how they are different from what we used to have a decade ago. Okay, and this is not just a story about candidates. Even the companies have evolved. We see every day, almost every day, more than 100 startups, coming up in each part of the world, right? And they work very differently than corporates. They have strict budgets for hiring. They cannot probably afford a long-time subscription to something like LinkedIn. Okay, they want to work with freelancers or contractors than full-time employees. Those stories are changing on both ends. But have our recruitment strategies have evolved? No, we still, go and buy something like LinkedIn subscription and stick to it for all kind of hiring, which is not the right strategy in the first place. Okay, so this is all about why we cannot reach the right candidates. Now, there is other side of the story where some established companies or large enterprises manage to get good number of applications, right? But the problem is they cannot identify the right candidates soon enough, right? For example, someone like Netflix, in the first hour of posting their job, they get more than 500 applications, right? One of our potential customer has shared their data with us, and as per that, they take 35 days just to look at the resume first time. Do you think that a candidate is going to stay for 35 days? No, they're just going to go, move on, find other job, find other opportunities. So the whole story is the HR tech, the recruiting platforms haven't evolved to solve the problem of finding the right candidate. So how do we solve that problem, right? As a CVs, what do we do is, it's simple. We solve this problem using awareness, using AI, and using smart automation. What we do, we take your jobs to the right candidates in the first place, right? Once we have the candidates, we match them with the jobs and tell you how relevant they are based on your previous hiring decisions and your job requirements. And the third thing we do is we take you, we engage them in the best possible manner so that your brand value doesn't get hit. And how do we approach this problem? Take jobs to the candidates, screen, match, and rank them, identify the best of them, and engage them with the best candidate experience, right? Now, I have spoken about all these problems and everything, right? In order to validate this, right? Is there a validation to this? Of course, we have been in the business, and the topmost brands from the world have approached us to solve their recruitment problems, right? You can see some names, some very, very, very popular names on your screen, and all of them, either they are our customers or they have engaged us in some way, they have done some pilots or POC programs with us, right? So this is just to validate that the problem with recruitment is there, and it's a big, big problem. So whether the problem is scalable, yeah, let's look at the market. Okay, so the market size, if I just look at the recruitment in itself, is a $400 billion industry, right? And it has many flavors to it. There are job boards, there are ATSs, there are recruitment agencies, right? And when we talk about hiring, we generally think of large companies, large enterprises. But just to focus on small, medium companies, I put those numbers from US, and it's just US that you see on the screen. But there are large, small, medium businesses all around the world, and we have customers from there. Just to emphasize the small, medium businesses story, I put a small story of Workable, which is one of our competitors. They started in 2010, and by 2019, they were $30 million revenue company, and 70% of their customers are companies that are less than 100 employees. Okay, so talking about Workable, which is one of our competition, let's look at the competition, right? So this is our competition. So we largely set two kind of solutions. One is an end-to-end hiring, also called as applicant tracking system. So we have some modern ATSs in our competition, and we sell AI, AI solutions like AI for resume screening. So we naturally have competition from them as well. But what we offer is the best of both worlds, which very, 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 very few companies or products offer. And we have certain advantages that our content strategy has worked and has got us out of that acquisition, right? So this has been, so we have seen the validation, we have seen the market is big. We also have the competition. It only emphasizes that the problem is real and everybody wants to solve that. So how far CVS has gone and solved the problem? So this is our growth story. This is our customer acquisition story since 2019. We have gone up month on month. We have more customers every month. We have gone up every year on year, right? How does that translate to the revenue? This is our certain, recent revenue numbers in the last 9 months. And we have more than, 1,500 customers have come up since April 2019. We are serving more than 20 countries, right? And we have recurring customers as well. Just to look at the revenue numbers from the top perspective, this is our story starting 2018 and 19. So when I mention those numbers, this is starting April till end of March next year. So you can see we started very small. We slowly grew in 2019-20. In 2021, the growth story continued, and the growth story continued into 2021. So far, in last 5 months, we have clocked the revenue of $18,000 USD, right? And I extrapolate these numbers by end of, by March 2022, we expect to have a revenue of $60,000. And if we get a funding at this point of time, we have plans that can scale us to $250K USD by March 2023, right? So how much we are planning to raise here? So we're looking to raise a seed round of $500K USD, with the spend, most of it would go in hiring the team members for product and marketing, efforts. And of course, we'll spend it on marketing, actual marketing and infrastructure costs, right? So just to emphasize our plans, we have plans in place for both product development and in terms of how we are going to, acquire new market and new customer, right? So this is our story. Just to wrap it up, a small, info about us, starting with CVS. CVS was selected by an accelerator program by Associate General. It's a French bank. And we were the only startup to win any award in an accelerator program. We were awarded with the Rabbit out of the Hat award to emphasize on our great results, because nobody thought we could actually help companies using AI, to help them hire faster. So they were pretty impressed and awarded us that award. And just an introduction about me. I'm Amit, one of the co-founders. My last engagement before starting CVS, I was a vice president global technology for JP Morgan. I have more than 15 years of experience in the field of data engineering, NLP, and machine learning. Right? My co-founder is one of the best programmer I have seen in my career. So that's just about us and about our startup. If you have any questions, I'm open for it.
Thank you, Amit. Spot on time. So we have 5 minutes for question answers if there are any to investors.
Sure.
We can stop sharing your screen, Amit. Do we have any questions? Yes, Rajesh. Yes, Rajesh, you're on mute.
So you mentioned that the projected revenue would be $50,000 for 2023, if I'm correct.
No, by March 2023, 250K.
250K, is it okay? And do you have it just for 2023, or you have it for another 3 to 5 years?
Yeah, we have those projections, but for the meeting purpose, I thought it is good to stick to next 1.5 year for the presentation purpose.
Okay, thank you.
Dr. Chris, you raised your hand.
Is the product ready to be rolled out overseas, or is it primarily for the Indian market, stage 1? What's your international thoughts on that?
India is, I think, at number 5 in terms of customer acquisition. We already have customers, number 1 from US, number 2 UK, Europe, as well as Australia, right? And Southeast Asia as well, right? So we already have customers from more than 20 countries.
Perfect. Thank you, everyone. Thank you, Amit, for presenting today. If there are any significant interests, we'll let you know.
Sure. Thank you.
Thank you.
Hi, Prateek. How are you? Can you switch on your camera, please?
Just a moment, please. Hello, everybody. Thank you for having me here. It's an honor. I'm Prateek.
Hi, Amit. Yes. So we'll quickly move to the next startup, dear investors. It's a blockchain startup called Yena Tech. And Prateek, we have 15 minutes in total. It's up to you if you want to pitch for 10 minutes and take questions for 5 minutes, or pitch for 12 minutes and take questions for 3 minutes. Can you start by sharing your screen, please? Yeah, once you hit the slideshow, I'll start your time. Perfect, your time starts now.
Hello, everybody. My name is Prateek. I'm founder of Yena Tech. Yena means gift of healing, and we go with the slogan, changing states of mind. And give you a brief about myself. I have experience in 5 different industries. I'm an ex-Wipro, ex-Sdg Capital, ex-Amazon, ex-WNS Global Services, and also have knowledge in mechanical engineering, accounts, psychology, and anthropology. And I'm here to present you the problems that we addressed, but that we are addressing with Yena Tech. And our target audience, or target clients, which we are looking at, are businesses with underlying real estate. And the problems that we strictly noticed in these businesses is that extensive time and paperwork involved for raising capital on one-on-one approach is something that results in slower growth. And mainly the divide in fiat economy and crypto economy has led many businesses to die out because they cannot adapt the change or cannot choose which would be the best option for themselves. Our solution would be a single investment marketplace for tech and traditional businesses with underlying real estate, merging both fiat and crypto economy with ease. And what are the impacts that we go ahead and generate for the businesses and investors that get on board with our platform? Businesses save time. They have reduced paperwork because they only have to go through it once, and rest would be easier with the ease of technology and automation. Network support through our startup ecosystem partners, and easy capital raising process through digitization is something that we offer them. Investors are divided into 2 categories, mainly high net worth investors and overlooked investors. We have defined overlooked investors as investors who have lost their ability to invest, and we are targeting them as well to bring them on board. These investors will have traditional and tech businesses to look at a single platform where they get to approach for different opportunities that these startups are offering or businesses are offering, and as well as the businesses get opportunities to engage with each other, being fiat or crypto. We offer them several payment acceptance mode through several fiat and crypto payments. We also give them investment security because our share calculation is divided in a certain fashion that we give them a net share value, which also ensures that the shares of these particular businesses will never go down to zero. And we offer shares worth of 30K in rewards to every investor for different levels of participation. What is the traction that we have received so far? We are pre-revenue and we are dealing with 2 startups, mainly in clean energy and electric mobility space. And we are working on completing our regulations to start or initiate their dry run in a more disclosable manner with the end users. Let's have a look at the total addressable market. The total addressable market of all real estate around the world is more than 300 trillion. Whereas if we see where the number of individuals are set up, the service available market shows us that the residential assets are worth 162 trillion and the commercials come up to 29 approximately. And agriculture forest comes up to another 55 trillion. But all of this is accumulated at 10% of the habitable land. And 95% of the world population is located here. Whereas the total habitable land is 43% and 33% of it is left alone, which is an extensive market scope. And when we look at the whole digitization industry, hardly 1% of the world's physical assets have been digitized or put on chain. Our competitions mainly include all kinds of businesses who are dealing with digital or physical assets, mainly because they might or could on a later stage move into different functionalities. Hence, we are ensuring or considering that we work alongside or ensure that we are able to compete with all the competitors, including Coinbase, Reed, DigiShares, Kraken, Binance, SolidBlock, CoinDCX, CoinSwitch, Yena and Railblocks are something which have just started. We also have Reno and Polkadot asset version coming after. What is our ask and fund utilization? We are asking for 1 million, mainly to complete our tech infrastructure, to reach clients, cover 1 billion end users, and raise capital for the early clients, where our tech infrastructure will take 20% of the cost. 30% of the cost will go completing legal compliances for UK and EU region, starting from Germany. 40% of the cost will go for marketing, and 10% of the cost will be accumulated for staffing. To summarize what we are going to do in whole of 2021, 2022, and 2023. In the first year, we are building our MVP, calibrating our prices with our clients and early users, narrowing down the target market role to ensure that we drive momentum with investors and with clients. Our focus in 2022 will be mainly targeting mid-sized businesses through real estate owners and startup ecosystems. We'll create a credibility within the community, and then we'll go ahead and target the large-scale businesses in real estate-based businesses and non-real estate-based businesses in 2023. When I say non-real estate businesses, I'm mainly targeted at other industries having underlying real estate and not just real estate-based industries like malls and apartments and other structures. Our team, I'm the founder and CEO, and my expertise mainly lies in research and strategy and vision, whereas also in design thinking primarily. But I become a ninja when I'm working in a marketplace because of my team. And that is because of 2 main people, Dr. Poonam Sharma and Alok Adda. Alok Adda is my DevOps full stack developer, technical partner. He's an ex-SN, Smart Tech, Clarion, Capital India, and IBM. He has extensive knowledge in setting up tech infrastructure, both on chain and off chain. Whereas Poonam Sharma helps me primarily on keeping the mindset right in terms of dealing with my clients and also getting youth programs or student program mainly, which we are working with the colleges to develop case studies. Who are our partners? Untitled Arts is a multimedia design company based out of USA and India. We also have received EPIT certifications for social impact and customer social responsibility. Mainstage Hub has been one of our early partners who have been taking care of our go-to-market and also mainly door opening at several different places. Alvicus is our key financial partner and strategy improvisation support. International Investment Hub from UK is taking care of compliance with FCA and getting us innovator visa and opening doors with some businesses at early phases. Blockchain Lawyer is a legal compliance company. They are also responsible for crypto regulation or crypto trading regulation acceptance on 4th of March 2020. This is about us, and I would like to take some questions from you guys.
Thank you, Prateek. You have a couple of more minutes if you would like to add anything else. If not, we can take the questions.
One bit that I want to add here before we go on taking the questions. Why did we choose businesses with underlying real estate? And why are we not targeting any specific industry with businesses in underlying real estate? Because raising capital for businesses is our first goal. Our next vision step is to replicate these businesses onto the 33% of the habitable land that is left out. So we actually need to cover with 19 business industries, 9 other parameters in terms of sustainability, which are charted out. And then we'll go about choosing a specific piece of land where we could replicate these businesses as a physical network to the virtual network that we are creating over the period of time. Thank you.
Thank you, Prateek. Do we have any questions for Prateek?
Prateek, thank you for the presentation. Do you have any unique intellectual property in your business that someone else can't copy and replicate?
We have filed IP in India. This is mainly a process IP where we are offering $30K USD as an exponential growth process flow to our investors. What we do here is 30% of our organization is strictly forfeited for the end user, or for the growth of overlooked investors, because that flow could add up real value onto our business. And how do we do this? Every investor receives 10 Yena tokens on different level of engagement programs, and each Yena token is redeemable for shares worth of 2,000 to 3,000 USD, which gets cut off from our quota from our capital raise. And we charge 1.5% of the capital raise. So let's say 0.5% of that capital raise goes specifically on this quota.
Can I ask you a follow-up question on the regulatory pathway? Have you had, what preliminary feedback have you had from the regulators about your initiatives and managing the integrity of the electronic digitized assets?
When we talk about electronic digitized assets, they come into the equipment industry with an underlying real estate. And the only first regulator which we have approached is FCA, Financial Conduct Authority. The share calculation that we are going ahead with is the business valuation plus the real estate valuation divided by the number of sizable metrics of the real estate. Meaning each of this real estate share will have net share value. We have proposed this to FCA. They have assigned us a case manager, and we are working in terms of regulating this and then going ahead with securitizing. They will be proposing us with a sandbox once we have assigned some developers to there and after the regulation process. It will take about 8 weeks of time.
Thank you.
Thank you. Thank you, Dr. Chris. Thank you, Prateek. Do we have any more questions? None. All right. Thank you so much, Prateek, for coming in today. If there are any follow-up questions and interest, we'll let you know. Have a good day.
Thank you, Sumit. Thank you, everybody. Have a great day. Bye-bye.
Bye-bye. Great. So the next startup, we've been following up with them, but I guess there's some sort of emergency. They have not been able to join. And we have few minutes before we move on to the next startup. So I'd like to quickly take a feedback from all of you investors over here. What is it that you like about these startups, or what is the kind of startups you would actually want to, get in touch with? If we have any feedback for the next event that we conduct, we'll make sure that we bring in such startups. Do you have any specific points or any specific sector or stage that you have in mind? Yes, Bill, I see you unmuted. Yes.
Yeah, you caught me just before I opened my mouth. Building industry and building technology. I'd like to see some cutting edge building technology. Obviously, the world is moving more towards 3D printing and 3D development at a rate of knots. Would love to see some technology around the 3D technology market space and the building industry in general, and predominantly around the housing. I think housing is going to be a big sector very soon, and start to build out traditional methodologies, taking a lot of pounding. So I'd like to see something in that space if we could, or someone's in that space working with some technologies.
Got it. Got it. That that sector, Bill, is definitely interesting, and we did come across a couple of startups who are in that sector fairly early, but not probably not being not at the stage where they would be able to expand into different geographies. But yeah, once we come across them, we'll definitely look into it from your point of views. Any other interesting sectors or stages that you would like to look into? Rajesh, George, Vivid, Surana, Sean, James.
I think construction tech, which is sort of related to the building industry, that's highly manual still, and has a huge opportunity. I think it's seen some early glimpse of amazing uptake and a lot of cool ideas. So I think more of those would be really helpful.
So
otherwise.
Yes,
so I was about to share the feedback. Otherwise, you're facilitating it really well. You're running it tight on time and with fair opportunity to ask questions and share details. So that's great.
Right. Thank you so much. So a quick follow-up question for you. So when you say construction tech and something which is manual and something which would be in the automated sector, does it only belong? Do you want to restrict yourself to construction tech, or would factories and machineries be involved in that as well?
Yes, so the whole IoT and AI, combination. So everything that's required, equipment, human, the safety risks, all those aspects for construction, around construction, and any tech around that would be great. So I'm working with a few of them. They passed sort of this stage of procuring funding, etc. But that's a market that's got immense opportunity. So yeah.
Perfect. We do have one startup today who is in the IoT and automation sector, fairly matured startup, and they are looking to expand into US. Definitely Australia would be a wonderful place for them as well. And we also have a portfolio startup in the employee health safety. So maybe Dr. Chris and Debashish, they can reach out to you after the meeting and see how synergies align over there.
Sounds good.
Great. Thank you so much. Any other sectors that would interest you? Yes, Rajesh.
MedTech maybe.
So MedTech, could you narrow it down to specific vertical in the MedTech, or the entire of MedTech is interesting for you?
The entire MedTech is interesting for me, So we are partially a MedTech company as well. So we build the scenario-based training simulations in VR, and we are connected with we are highly connected with the hospitals and research centers. So if there are companies of interest, so we can discuss further.
All right. We are currently evaluating two MedTech startups. One is in the heart MRI scanning AI sector, and the other one is in the I guess it's for eye specialist, if I'm not mistaken, Debashish. So yeah, we have a couple of.
Well, we have a few medtech startups which are in the early stage of coming with us. So maybe in the next round is when we will be presenting you a few good quality startups. We have a very stringent level of scrutinizing the startup. So we sort of select only maybe the top 10. So the startups which you have seen so far have gone through our program and gone through our grilling in terms of moving them from what they were to what they are today, and it's still work in progress, I would say. So yes, I mean, I think this event is very important for us because we sort of understand directly from the horse's mouth about the insights of what could be what are the demands and how is the industry, how is the economy shaping up there. So med tech, construction tech, health and safety, definitely we take that feedback back with us in our next round when we have it, and we will keep on having this every pretty frequently now. We will bring those startups to you as well.
Sure, thank you. Thank you.
What we have brought so far is something which is going on pretty globally is fintech, blockchain, HR tech, which is a big problem now after COVID, companies opening up, whom to hire, how fast to hire. People have, companies have laid off people, so they need to now really scale up fast to cover the lost ground. So that's why we brought in HR tech. Blockchain, not in terms of really crypto, but at least the rest part of it, bringing a trust chain, a farm to fork model, in trade finance, in logistics. Those are the ones which we thought would be of interest, but we will add more. We are adding more and more startups as we speak. Sure. So in the next ones, we will have them.
Sure, thank you.
Thank you. Vaishnavi has link.joined.
Ive.1 joined.
Oh, wonderful. Let's get Ive.1. So Ive.1 is from Frankfurt. It's a very mature startup. It's raising Series A now. It's in blockchain space. Hey, Fong. Sumit, over to you.
Thank you, Debashish. Hi, Fong. Thank you for joining in. Good morning to you.
Hi, guys.
Yes, as you can see in our banners, it's global startups and Australian investors. So this next startup is based out of Germany. Fong, we are not going to take much of your time. We'll give you 15 minutes in total. It's up to you if you want to pitch for 10 minutes and take questions for 5 minutes, or pitch for 12 and take questions for 3. Can you start by sharing your screen, please?
Yeah, sure. Probably I pitch less and have time for more questions. Yeah, but let me share my screen. So let me go to presenter mode and then we can start.
Yes, please.
Okay, guys, you still see my screen?
Yes, we can.
Okay, all right, perfect. Then thanks for welcoming me for this pitch session here. And today I want to introduce you Ive.1. So I'm Fong, I'm like the CEO and one of the co-founders. And with Ive.1, we enable you to offer your clients digital securities and cryptocurrencies. So in general, what is our vision? Our vision is to provide better digital assets for everyone. What does it mean? These assets should be like more transparent, have like a higher valuation, and should be at least like having a more efficient way of transferring. So what is our mission? Our mission is to enable corporates, banks, asset managers, investment companies, and even securities brokerage firms to access to a modernized capital market with blockchain technology. So as we saw like in the couple of last years, the market requirements for financial market players are quite different. They need a reliable, secure, ready to use infrastructure and even APIs so that their clients can access digital securities and cryptocurrencies without technical knowledge. What's our product service? So Ive.1 provides like a plug and play infrastructure with a white label front-end solution for corporates to access these digital assets. And this infrastructure is built on global regulation and compliance. So what's the challenge? As you can see, normally digital banking is changing the whole industry. So if you take a look, for example, at N26, at Revolut, you see that they drive financial innovation. Yeah, for example, they adapt fast to new trends, for example, as cryptocurrencies to offer it in their core banking systems. It's digital, it's available anywhere immediately and via mobile. And the third one is like, it's totally customer centric. Yeah, so all services are simply like for the end customer. And banks are definitely not part of this. So what's the advantage to be innovative? Yeah, first of all, you have like a different kind of revenue stream. So if you diversify your product portfolio, you create, of course, like new revenue streams, for example, with crypto or tokenized securities. You totally have a different kind of customer journey. Yeah, so you create new customer touch points in a more digital way. And the third point is like digitization. You acquire completely new customer groups with new technology trends. Or probably I can ask you, like, when's the last time you went to like a banking office or something like this? Yeah, quite interesting to see. So how can you join this digital asset industry? There are two different ways. One, you become a technology provider yourself. Or second, you use the infrastructure from an already existing provider. If you become a technology provider yourself, this mostly comes with a lot of challenges. So first, know-how. You need to build up these expertise within your own team. Second, you need to build like a digital asset infrastructure from scratch, because you have like legacy systems, old infrastructure that you need to change. And third, go to market. It probably takes up to 250 months to create like a viable product. So easiest way is like to become a partner of IF1 to access like the next evolution from digital to blockchain banking. We provide access to digital assets, as I mentioned before. This refers to cryptocurrencies, but also, for example, tokenized assets. We provide like a modern tech stack, which is even in the cloud, but of course, like we can install it on premises. And as a fintech, you're always much faster and more innovative than mostly banks. Up to now, we invested nearly 2 million and probably used about like 7.5 man years to create like this leading infrastructure for digital assets here in Europe. So what we offer is like really, we empower any company to offer digital assets. As I spoke before, it's corporates, for example, if it's like a BMW, it's a bank. Yeah, if it's like, for example, a BNP Paribas, asset managers, or even investment companies. This is our IF1 ecosystem. And we're looking definitely for a B2B2X business model. So it means like we as IF1 provide different kind of services, for example, like tokenization, compliance, the investment side, where the investors can onboard cryptocurrencies, where we partner up, for example, with Coinbase, the decentralized crypto register, and even like the custodian side. So this is like how the product looks like for the bank or for the end client from the bank, let's say like this. So we have like the technology completely in the background, and it's completely user-friendly in the foreground. So we use like the different kind of APIs so that customers or clients can easily access directly to our system. So we already live, yeah. So we all have 14 partners. I think one of the biggest two are Coinbase, who we cooperate with regarding cryptocurrencies. And the second one is DWP Bank. Yeah, we just recently won this client, which generates over 3 million revenue over the next 12 months. And with this also comes potentially 15 million clients. We're backed by strong investors. One of them is like EOS Venture Capital, which belongs to Block 1. Yeah, and also like strong European ones like the High Tech Fund. We are IF1, so we're 20 plus members. We're diverse. We speak more than 15 languages. We're a unique mix of experts, like from bankers, like entrepreneur, sales, legal designers, and we really have like a strong tech background. And that's it. Yeah. So thanks overall. This was like a really short pitch to introduce myself and IF1, and I'm open here now for any questions.
Thank you, Phong. Thank you so much. There's some internet issues, so I'll keep my video off for a while. Do we have any questions for Phong and IF.1? Yes, Dr. Chris.
Hi, Phong. Good to see you again. What's your global rollout strategy? What's the company thinking about moving forward?
Yeah, sure. So we're currently like in the now a Series A round where we're looking like for 10 million euro. Yeah, so I already have a lot of co-investors. I'm currently looking like for the lead investor, which are already negotiating right now with a couple of ones. And the idea of the rollout is that we definitely focus on Germany, Europe first, but of course, like we're targeting like APEC itself. Yeah, even if it's like Southeast Asia, if it's like Australia, if it's like more above, like in Japan, South Korea. So important for us is not only like the strategic rollout into specific kind of jurisdictions, but also like the regulatory framework, where, for example, you can definitely dive into this whole topic a little bit deeper. And from what I know right now, is that Australia is somehow a hot topic. Yeah, what I saw from the jurisdiction. Yeah, so definitely a potential rollout candidate. Yeah.
Perfect. Yeah. Thank you, Dr. Chris. Thank you, Fong. Do we have any more questions?
I think Bill, James. Yeah.
Yes, James.
You're
You
mute.
are on mute, James. James, you're on
So
mute.
much for the space bar. Thank you, Fong. I like the presentation. My question is, who are your customers? Who do you see as your customers in Australia?
Yeah, so what I see mostly would be like local banks, yeah, where I see that they, for example, could provide their clients access to cryptocurrencies, but also, for example, tokenize real estate, for example, Commonwealth, but also I'm at a bank like NAB or something like this. I forgot the name. Yeah,
NAB,
but NAB, yeah, something
Mainstage.
like this. Yeah, but it's like really, really local, which I think like could be like the first entrance to this market. But also like from technology-wise, like real estate companies or real estate developers, because globally, if you take a look at the market landscape right now, real estate is one of the most interesting assets for investments. And to break it down to lower thresholds so that retail people or like professional investors can join it could be also quite interesting.
Thank you.
Great. Thank you, Fong. Thank you, James and Dr. Chris. Thank you so much. If there are any more questions, we'll take it.
All right. Thank you very much.
If not, thank you so much. Thank you, Fong.
Yeah, thank you. Bye-bye.
Bye. Great. Hi, Dave. Good afternoon. How are you doing?
Good. How are you?
We're doing good. Can you switch on your camera, please? That's okay.
Sumit, you can hear me well?
Yeah, I can hear you. Can you switch on your camera? That's okay with you?
Yeah, I will. Actually, you got to pardon me. I'm in one of the manufacturing plant area. So.
Oh, perfect. Perfect. Pitching right from your client's base, is it? That's good. That's good.
So I will try my best to switch on my camera in a minute. And I hope you can see my screen as well. So.
Yeah, we can see your screen. If you can remove the passwords, we can see all of them.
Just trying to keep my cameras on.
Yes, can you share your PPT instead of your username and passwords?
Sorry?
Can you share your presentation instead of the passwords? We can see your username.
Yeah, sure. I will do that. Okay.
Yeah. Once you hit the slideshow, we'll start your time. We'll give you 15 minutes in total. Can you go back to the first slide? We'll give you 15 minutes in total. It's up to you if you want to pitch for 10 minutes and take the questions for 5, or pitch for 12 minutes and take the questions for 3. I'll start your time now.
Thank you, Sumit. Good morning, good afternoon to all of you, whichever part of the world you are. My name is Dev. I'm the director and co-founder of LinkDots. So very quickly, LinkDots is about enabling digital transformation to industrial IoT products and solution. We have been in the business for the last 6 years. In fact, we work with one of the very marquee customers like Tata Steel, like United Phosphorus, Exide, Hindalco, Grasim. So some of these are customer bases. So you can see my face here. My name is Dev, and I got about close to 30+ years of experience in IT and telecom. Prior to founding this company, I was a general manager and head of telecom and Wipro, where I was leading all the telecom network equipment side of the business. Then I was a vice president at a company called Scient, where I was heading a semiconductor consumer and medical business unit. My other directors and co-founders are like Dandapani, he's an ex-IBMer. He's been worked in the US. He's been with IBM, working for Vodafone and Sprint, doing with quite a bit of telecom companies. And the third gentleman is Ravikant. He's my former colleague in Wipro, and he's been a mobile devices expert. So we three are the founders of the company. And collectively, we carry a rich experience in IT and telecom, and we have been in this journey for the last 6 years. So what we really do is we kind of really work with large manufacturing companies. Most of our deployment are multi-plant and multi-site. And we kind of come up with our own, we work with the manufacturing plants, we work with oil and gas industries, construction and shipping and logistics industry. These are our customer base, wherein our solutions are primarily used for making sure that the operations are on time, their productivities are improved, and their qualities are being increased by virtue of having the solution implemented. And we enable productivity, safety, and security in a plant, typically through our solutions, which I'll tell you how we do it. And see, these are some of the questions that have been answered through our solutions. So where is my workforce? So typically they know they enter the plant, they exit the plant, but they wouldn't know where they are in a typically large area. And they also would like to know, are the right people in the right place? Because of the fact, like, there are too many people working in a plant, and we just want to make sure that, every department and every sections are correctly, adequately staffed. And they also would like to kind of really get some real-time alerts if any unauthorized movements are happening. And also make sure that the workman time spent in the respective zones are measured contactlessly and non-intrusively, and bring in some amount of process efficiency, if you will. And the same thing is applicable for materials as well. In fact, we look at typically manufacturing plant, you require three things. You require the man, the machines, and the material. We apply the same logic for the raw materials as well as the finished goods in a typical plant. As well as we also make sure that the utilization machines are being utilized correctly. So we connect all these three things together and make sure that it exists along with the existing ERP system. So now what we really believe is it's a very large opportunity space that we are in terms of industrial IoT, if you will. And so we kind of really came up with a platform, which is something which is a little bit more robust, which can take any industrial sensors on any different form, whether it's coming from RFID or a Bluetooth or a Wi-Fi or a QR code. It can take anything, and it can also use combination of multiple technologies, and it can coexist with the existing processes. And what we really believe was most of the plants are already operational, and we really required to kind of really integrate our solution on top of it. So that is something which we really do. And it can be hosted on-prem or on any cloud platform. So what we really bring in is the two parts to it. Okay, one is we bring the hardware element, that is our own product as well as third-party products, whichever is required. And we also bring in the applications which are relevant for the business. We understand the assets platform, we understand the assets system, and then we look at what will be the to-be system, and we deploy and operate. So essentially, we kind of really are there with them in the whole phase of journey, starting from almost solutioning to kind of really identifying the problem statement to deployment to like operate. And once we operate it, we hand it over to the customer for them to run it on their own. That's what we do. And this platform, which we really have built, has got abilities to kind of integrate multiple sensors. It has been robust over a period of multiple years. I mean, for 5-6 years, it has matured. In fact, as we really start visiting more and more plants, we get new ideas, and we kind of really make sure that it is getting strengthened. And it is also like, it's easy to provision and easy to deploy now. In now 4 to 6 weeks time, we go live in usually typically one plant, and then like subsequent plants are easily replicable. So it's kind of really multi-site and multi-deployment. So our flagship product is Connected 3M, Connected Man Machine Material is our flagship product. And we also have built a lot of derivative products, if you will, which are very focused on contract labors, which are very focused on confined spaces, which are very focused on the yard management and the machine handling and material handling part of it. And we work with Maersk on the logistics, track and trace. So we track the containers inland, which are moving inland in Europe and North America and Africa. So we work with Maersk as a customer, where we built our track and trace platform, and it's been hosted inside the Maersk environment as a complete solution there. That's what we do. And primarily what we really, our business model is about digital transformation. But what we really believe was, when we visit every plant, there are multiple areas in which we can really automate. And we look at everything in small bits and look at how we can be making it more intelligent and efficient. And we look at literally on the ground, like how are operations being carried out, and then look at what can be the to-be scenarios actually. And thereby they are increasing the productivity, thereby they're making sure the whole thing is safe and secured. They are able to better plan and control actually. So our business model is typically two parts. One is we charge for the consumables. And just here I'm giving you an example of a smart tag, which is a Bluetooth technology based. We charge for that. We charge for our readers, which are nothing but the gateway devices. And we also charge for the application. Applications are where the intelligence lies. So our model is more about consumables and application. And then once we deploy it and operate, we also charge them an annual maintenance fee. That's where the revenue starts coming in for us actually. We have collaborated with Intel, Accenture, and SAP. In fact, our uniqueness is about combinatory technology. So we kind of integrate multiple technologies and multiple platforms. And these are some of our customer base. We work with Maersk, Tata Steel, Aditya Birla Group, Exide, Royal Enfield, and UPL. We are headquartered in Bangalore. Our field teams are there all over India. And now we are looking for we have been kind of growing for the last 5 years. We had a little bit of hiccup during COVID, but again, we're coming back this year. In fact, we have been profitable most of the time. That is our goal in terms of trying to make sure the company is profitable. And it's been right now funded by the founders. And we have a 2% incubation in IIT Bombay, an organization called Sign. And we have a very small friends and family investment at the moment, actually. So what we're really looking for is an investment right now for geographical expansion. We're looking at US and Europe as a market now. We believe now the product is very mature, very stable, and we require funds to kind of scale up and grow into other geographies, predominantly more in terms of sales and marketing, more in terms of product scale up, and also purchases for sale. Purchases for sale are primarily more in terms of what we really want to buy, and then those equipments and gears which we build and sell it up. And we are very open for equity as well as debt-based funds. And we are looking at investments for the investors in 3 to 5 years time. So that's where we are. And with that, I'll stop and I'll take questions, and we can have more detailed discussions once you understand what we are, and now we can get into a lot more details actually.
Perfect. Thank you, Dave. You can stop sharing your screen now. Great. We'd love to see the factory that you're working from.
I'm just turning on my video so that at least you can get to see me now a little bit. So.
Okay. Perfect. Thank you, Dave.
So I'm not on a beach. I'm typically a plant. I'm sorry. So.
Great.
You can turn on your background. We can see the factory behind you.
Sorry, I just want to keep it confidential. So I'm sorry.
All right. Do we have any questions from the investors? Surana, I think this is your domain. You have any questions for Dave?
No, I'm good for now. Thanks.
I hope it was clear. Was it solutioning that we are doing clear for you? I mean, you understood what we are trying to do.
Dev, can I ask you, thank you for your presentation. Have you captured data about the impact on the business by deploying your methodologies? So impact on your clients, whether they've reduced incidents, whether they've increased efficiency, because that's always very helpful to say that come with our package and this is what savings you may experience.
So typically, if you look at, I'll give you a very rough example. Definitely there is a, return on investment is there for the customers in anywhere between 6 months to 12 months for them. So I'm just talking about a typical investment of about 1.5 to 2 crore Indian rupees for a size of about 5,000 workmen and about 50 zones roughly. And in fact, their payback period is, even if you look at 2% improvement in terms of the productivity, they are talking about 4 to 5 times the benefit of the investment that they really are making for in this particular solution actually. So looking at the gains for them is predominantly more in terms of the arresting leakages, making sure that the accuracies are there, making sure there's no incidents, and also making sure that the operations are smooth and they have a contactless and non-intrusive way of trying to measure the actual parameters, right? So the challenge is more about, you have SAPs to store all the information, but we don't have the methodology to kind of measure the actual part. That's where we come in. We come in with IoT in terms of those sensors to measure what they want to measure and how they want to measure it. And those parameters are something which really bring in the savings for them actually.
And are you able to, do you have any unique processes which a competitor cannot duplicate?
Okay, so basically, if you look at from an application standpoint, we're very adaptive. We work with steel industries, we work with aluminum industries, we work with coal manufacturers, we work with the chemicals, pulp and fiber. So battery manufacturing companies and all the stuff. So basically, we are a little bit more agnostic from an application standpoint, but however, we do have the know-how of multiple industries, and in fact, we can easily kind of bring in some of the best practices because of the fact like we have deployed this in multiple scenarios actually.
Okay, thank you.
Now, basically, the market has been a little bit, what do I say? It's been reverse innovation to some extent. In fact, like, we've been kind of testing the waters in our own soil. And now, basically, we thought like we'd seek investment and then go out. In fact, the Beshishan team has been helping us out in terms of trying to get into Europe. And that's where we come in, and we reached out to them, and they've been very helpful in terms of reaching out to some of the investors who can potentially invest and as well as guide us in terms of the new markets, right? Because see, though personally I worked with the US, Europe, and Japan and the rest of the world on telecom, but not necessarily on this particular space, right? So that is where I think I require some support from the investment community as well. Not only the money, but also more in terms of the connects part of it actually. Technically, we'll implement the solution, no problem. That's easy for us to do. We can give them the value. But we lack some other which we will get help from actually, where we are not experts.
Right. So thanks, Dave. Yes, James and George. James,
Dave,
please go ahead. Then we'll take.
Dave, it was a great presentation. Thank you very much. How big do you have to be to get benefit out of this? And how many customers are there that have got 5,000 workers in a plant, for example?
We have, usually, George, right? We kind of implement the solution in multiple plants. For example, if you take a good company, like for example, in the case of Tata Steel, we got about 20,000 employees, which we've been doing it. In the case of UPL, we're talking about 15,000. We're talking about Exide, we're doing another 20,000. So basically, the volume varies actually. And depending on the group companies, and we normally want to target the large corporations wherein they have multi-site deployment actually. So you deploy it in one site and you replicate the same process elsewhere actually. So that's the model.
And how many customers are there in the world?
About 4 large customers we work with. We work with Hindalco, we work with Grasim, we work with UPL, we work with Exide and Tata Steel. And we also collaborate with Accenture. Accenture does that consulting part and we do the technology implementation. We work with SAP. SAP is another good customers where they're looking at IoT enablement and they kind of take us along with them for the solutioning part. So we do that as well.
Great. Thank you, Dave. George, over to you.
Dave, what type of resistance do you get when you're trying to explain your product to one of these manufacturers?
Mostly, George, it is about their own existing processes and what's the delta change we bring in and how they are able to adapt it quickly. Most of the time, they don't want to take extra work. I mean, they just wanted the minimal interactions and they just want to make sure that everything gets automated for them. Once we tell them, look, whatever you're doing, it's going to continue the same, except you're going to do it digitally, then things are changing. So they are trying to see some benefits coming out of that actually. And if they are very able to save some of their time and effort, they really adopt it very quickly. And if it's easy to use, they take it very quickly. So I found resistance to change primarily because people have been doing this for many years, right? I mean, it's very hard for the people on the ground to change certain times. So that is where we find resistance. See, the top level will buy into this argument very easily. But when it comes to the rubber meets the road, when you really want to go down and implement on the shop floor, it is a very different rhythm altogether. So we may have people along multiple people in the organization structure and then take them along the whole implementation journey. So that's what we found actually. So there will be some resistance during implementation as well. We found a lot of operational challenges, which we have ironed out now. For the last 3-4 years, there have been more operational challenges than actual software problems actually.
Yeah, not surprised. That's why I asked the question, because customer behavior to change is not easy.
Yeah, no, but I think now we are mastering that slowly because our field teams are now getting geared up in terms of facing such scenarios and projects because of the experience that they gained as well. And I think we also become a little bit more mature because we are seeing now varieties. In fact, even in the same group companies, you'll find plant 1 to plant 2 completely different. And depending on the geography they come from. As you know, India, right? Each state is different. Each state, the way of working and everything will be completely different. So that gives us a good ambience in terms of looking at. In fact, this is almost like a mini Europe for us, right? Because when I move from one state to another, I literally get to kind of see different way of working.
Great. Thank you, Dave. So, we are here with the Australian investors, and as Surana had mentioned, construction is a huge, it plays major role in Australia. So, how does your solution work in the construction environment?
Right. So we have so far implemented the solutions for mines constructions. We have done for steel constructions. Now we're doing for chemical constructions. So basically, when you do construction, typically what happens is there's a workman almost from the ground zero, right? I mean, they want to kind of really find out how many workmen are there when they're working there. And as the structure starts coming up, the whole, in fact, our readers that I showed you are implementation wise. As the construction starts maturing, we can keep shifting our the readers which are capturing the workman presence from stage to stage, or materials from stage to stage, or even the machine movement. So like construction projects typically are planned, and then like you look at what manpower required, what machines are required, what materials are required, and then against the plan we measure all the actuals. So it literally works very well, and we've done this examples for steel plant and constructions, and also for a chemical plant constructions actually.
Great. Thank you so much, Dave. Yes, Dr. Chris.
Just a quick question. You mentioned mine constructions, big industry in Australia. What did you do in the mine construction area?
Yeah, so George, right?
Chris, but you can call me George. I've been called worse.
Yeah, Chris. So Chris,
lucky.
What you've done is for typically iron ore mines. So there are iron ore mines in eastern part of India. I mean, I would say northeast part of India, where the requirement was to kind of construct. They kind of extract the iron ore, they crush the iron ore, and they kind of really ship it there. So this was construction of mines where the iron ores are extracted and crushed and put into the coal wagons and for shipment to the manufacturing plant. So where we have deployed the solution was actually construction of the place near the mines, which was used for primarily crushing and taking the iron ore into the wagon plus. I'm sure like will be there for Australia as well. You can consider this to anything else. I mean, either a coal mine or an iron ore mine, right? Even coal, we are doing it for Hindalco actually. Where coal is, we are doing it more in terms of taking into the plant, but not really in the mines. But iron ore is a very good example of mines construction.
Thank you.
Perfect. Thank you, Dave. Thank you, everyone, for the wonderful questions that you put forward. Dave,
yeah,
is there
I'm sure.
any significant interest?
If you have any questions, we'll be happy to take it later as well. Sumit and
absolutely, yes.
Sumit and team can help us out with the questions actually.
Yeah, absolutely. Thank you, Dave. You have a good day.
Thank you.
Enjoy at your client side. Bye-bye. Right. So the next startup we have is Mistio. We have Nick and Samuel from Mistio. Nick, Sam, who would like to go ahead and pitch?
Hey, gentlemen, pleasure to meet you. So yeah, as mentioned, my name is Nick Kumar. And Samuel, do you want to do the pitch and I can share my screen?
No, go ahead, Nick. I will step in as and when. Not an issue, because I thought we were doing Nick, it in another 15 minutes. So.
All right. So we are actually running early. So Nick, we'll give you 15 minutes to pitch. 10. It's up to you if you want to pitch for 10 and take questions for 5 minutes, or pitch for 12 and take questions for the next 3 minutes.
Right? Sure. Not sure how long we'll go for, but we'll definitely allow some time for questions, guys. So pleasure to meet you. As mentioned, my name is Nick Kumaran. I'm the director of Mistio in Australia. On the call, I have Satish, who's another partner with Mistio in Australia as well. And we have Samuel John, who's the co-founder and chief data officer for Mistio as well, and runs all of the global operations. So thank you for your attention here. So Mistio, what are we? Mistio is a climate fintech company. Our primary purpose is to essentially develop parametric insurance products, but we utilize a variety of data sources to do so. And as a result of that, we're able to put to market a wide variety of financial mitigation solutions. These are marketed towards private enterprises and governments. What we aim to do is essentially provide that bridge that can allow for financial mitigations towards climate change and the costs associated with that. So the problem that we find, as mentioned here, anthropogenic climate change is a clear and present threat to humanity. That has been well and truly seen. What we have also found is that the global financial stability in the form of physical and transaction risks in a low carbon economy is not necessarily well understood. And what we aim to do is plug the gaps where data may exist there. To quantify the problem, so as we can see here, the analysis shows that we do really face close to $1 trillion worth of loss by 2023, 250 billion of that in write-off complete. So the way capital markets will be affected by this is well and truly understood. However, we do see a gap in the market in terms of developing solutions that can help companies overcome these, or at least understand the risks better. So what and how we do this? What I might actually pass over. Samuel, do you want to run through this particular slide in detail? You're on mute, Samuel. Samuel, you're on mute.
I'm sorry, the mute ghost that I have all the time. Sorry. No. So essentially, what we do, how we do is basically our key focus is understanding weather and looking at it in terms of how weather can be converted into financial tools. So the key expertise that we have is in climate economics and in actuarial science and in the climate actuarial space. What we have in addition to that is building the complete technology platform that we have, which is called Climate Chain, which Nick will explain to you in the subsequent slides, where we bring in spatio-temporal analytics, that is GIS and satellite-based data, weather modeling, which is built by our in-house team of weather modelers who is doing the 1 kilometer by 1 kilometer resolution. Currently in India, we have the domain looking at about 1.7 million grid points at any given point in time. There is a very large aspect of machine learning. The machine learning aspect, it's not AI yet, machine learning aspect, where we bring in all the weather data and then look at how the patterns are, understand the climate, long-term and short-term climate impact of that, and then blockchain as just an enabler, because one of the key things that weather has done, and weather, one of the in the industry, the weather aspect is done, is looking at how we can bring provenance into that infrastructure. All this put together, we basically provide the weather-based risk management solution to our customers, insurance companies, and governments. Nick, back to you.
Okay, thanks, Samuel. So in terms of how the platform works and how parametric risk transfer works, which is one of our primary goals, we basically start off by assessing perils and vulnerabilities and developing data sources that allow us to basically compare these against parametric triggers that we as a team develop with our team of actuarials and in conjunction with our clients. Understanding once we understand the perils and the vulnerabilities and the triggers, we're then able to do the risk modeling that allows us to decide on what appropriate payout would be achieved if particular parametric triggers are in fact met due to a variety of different events that you can see below. Once those parametric triggers are met, the payout is automated, which allows us to then seamlessly integrate this parametric risk insurance into the workflow and lower the administration costs associated with providing this risk insurance to many parties down the chain. As you can see, there's a variety of different events and there's a variety of different trigger points that could potentially be used in the calculations to understand what kind of payouts would be applicable to a particular scenario occurring. So the opportunity that we see here, you can see due to the economic losses that are sort of anticipated due to these natural disasters, globally annualized insured loss, US 90.3 billion. So if we were to, for example, go after a target market of 1% of that, that's almost close to $1 billion in terms of a target market that we believe that we can service. The platform revenue, if we were able to achieve that at about 1%, would therefore translate to about US $9 million annualized. So where does that sit in the sensitivity analysis? Obviously, if we do look at different permutations of how we can operate and how we can scale, we can therefore then see different results. Obviously, the upper right is where we do want to be eventually, but we believe that with the assumptions that we're making on our business model so far, we would hit at around that $9 million mark. Okay, the climate stack. Samuel or Sdg, do you want to go through this particular slide? Is that okay?
Yeah, sure, no problem. So yeah, thank you again, Nick. So I would like to now just give you a complete explanation of what the entire solution looks like. So the climate stack is something that is core to our business, and it's a three-tied approach. Right at the top, we have the catastrophe risk modeling solutions, which is CAT risk, which looks at about 24 different perils worldwide on a daily basis, understanding their impact on various types of, various types of events, earthquakes, earthquakes, cyclones, storm events, high wind speed, extreme heat events. This is done on a daily basis by using a variety of Earth observation tools, including weather observations as well as Earth observation site. We have Indra, which is basically our weather forecasting stack, and this is what I was talking to you about, the domain specificity that we have, right? So we are right now in India doing a 1 kilometer by 1 kilometer resolution data, and this is providing a 5-day weather forecast plus it also does the weather observation side. Right at the bottom is where the real, the real engines of our growth is. So the climate cover product basically looks at different verticals. Starting at the left-hand side of the screen, which is medical, which is going to be on comorbidities in relation to climate change. For example, heat, human heat is a very big challenge. It's a growing threat, and a threat that has been identified by various agencies, saying that how heat impacts human health, all the way down to the complete value chain insofar as humans are concerned: agriculture, livestock, apiculture, and aquaculture, wherein we provide the entire product deployed on our platform. So you end up having near real-time settlement, and agriculture by far is the most mature of our stacks. You see something which is interesting called climate token on the insurance and finance side. That's where we will reach in another 9 months time. Climate token is essentially your decentralized weather risk exchange. What that means is Nick sitting in Australia has a climate risk that he has. He can host it on the exchange. Me sitting in India, Sumit sitting in New Delhi or Bombay, wherever he is, will be able to buy into that risk. So basically, you decentralize the idea of owning the risk. So this comes from the good old days of mutual finance, where a group of people come together and then they basically de-risk each other. So what we want to do is take this global. So climate token as a platform will be where all the activities that we are going to do ends up, and all that is powered by Climate Chain, which is our blockchain-based risk insurance platform. Nick, back to you.
Cool. So in terms of a timeline, Indra is currently in beta testing, probably moving out of beta testing very soon. And we're currently essentially actively developing the climate cover and climate risk products as well. Climate Chain, we're moving towards probably the end of this year, and the climate token is an activity for next year. But activities in terms of analysis have already commenced for all of the remaining items as well. So our traction, as you can see, we've actually either commercialized or POC'd in a number of different jurisdictions so far. As you can see, we've done the lightning early warning system in Assam. We've got the parametric crop insurance in Kerala. That's usually using blockchain and tokens. Parametric crop insurance in Uttar Pradesh as well. Parametric natural catastrophe for Pan-India. The National Insurance Academy of Pune has a parametric natural catastrophe and livestock insurance program that we are part of as well. And we have the low-cost weather stations for hyperlocal weather forecasting in Kerala as well. Climate risk transfer in the state of Kerala. And we've also just recently deployed parametric apiculture insurance products in a POC form for Paraguay. So our ask, in terms of where we believe we sit in the market and the definite amount of value that we provide using our climate risk platform and the remaining roadmap that we've got, our ask so far is at $5 million for a 10% stake. How we intend to use those funds, we do have certain amount set aside for infrastructure and development. Business development and sales across the regions will take an equal amount. Talent augmentation, although we do have close to 25 staff members now, we do believe that given the traction that we're experiencing, that growth will be exponential in the next few months. Marketing will be there at about 10%, but we do want to invest further into the product to build out the remaining platform components that haven't been built out yet. As I said, analysis has already started on those. So our SDG impacts, in terms of the 17 SDGs that we all know, we do feel that we cover 13 of those out of that. And there are 13 significant ones. So no poverty, zero hunger, good health and well-being, gender equality, affordable and clean energy, decent work and economic growth, industry, innovation and infrastructure, reduced inequalities, sustainable cities and communities, responsible consumption and production, climate action, life below water, life on land. One of the driving forces of what we do, obviously as a climate change company, is making sure that we adhere to these as much as possible and drive our progress in terms of each one of those. State of play. So we are present in multiple jurisdictions across the world. Australia is the latest, Australia and New Zealand, sorry, is the latest sales office that we have set up. Our expansion into that market is quite hungry. We have already been part of conversations with quite a few opportunities in solar sequestration and carbon regeneration. And we are actively seeking, or we're actively developing, sorry, a parametric risk product so far in terms of dairy heat load index. We do believe that we will be able to gain a lot of market share in this region in the next couple of years. Our team, so you've already met Samuel and myself and Satish. We do have another member, Charco, who is based in the United States. Charco is the Chief Business Officer and is also one of the co-founders of Mistio. He brings a wealth of experience as part of his role with the Weather Company and with IBM. And he is one of the, I guess, global thought leaders in agricultural technology as well. We have an extended team as well who work with us in India, and that will be built out as well. So Annie, Ambarish, and Smitha are present there guiding the product development and the technology and project delivery. And as I mentioned before, our full team extends to about 25 people so far. And as part of our recognition, we have been part of the Social Alpha program as well. And I believe that Samuel is just exiting the Nexus Acceleration program. We have just been introduced as part of the Chaos program as well. So we have been quite active in the accelerator scene across the world, and this has given us a lot of multi-jurisdictional exposure and market share as well. And that is our presentation so far. Ladies and gentlemen, do we have any questions?
Thank you, Nick. You can stop sharing your presentation for the time being.
Sure.
Yes, do we have any questions? Yes, Dr. Chris.
Nick, Samuel, thank you for the presentation. It's a fascinating, emerging and current need. Have you dealt with Lloyd's insurance brokers, and have you gone to the globals to say, guess what, we've got a product, guys, you've got to get onto this, or the futures market guys through Goldman Sachs and the trading guys, because this is a no-brainer, I think, for them.
Yes, I can answer that question, Dr. Chris. So way back in 2019, when we actually set up the company, we were a bit late for the Lloyd's Lab. So we could not do that here. 2020 was a washout because of COVID. And 2021, again, we missed the deadline for Lloyd's Lab. But we are in touch with Lloyd's Lab in terms of, building this out. And as a matter of fact, we work very, very closely with a large group of companies in the UK. London being the center of the parametric world, in parametric world, to build some of the products out. So our strategy insofar as Western Europe and the access to the London market is going to be through the current existing relationships that we have in India, because we want that to mature. So for example, Tata AIG, which is a very large insurer in India, on the NatCat perspective, we work with them quite extensively on building these NatCat products for various state disaster management authorities. So basically looking at providing insurance cover, wherein the CAT risk product has gone in, and the CAT risk product is extensively built on the Oasis loss prevention framework. So our team has complete access to the loss prevention models, and we've been building that and focusing on our geography here in India, and eventually we would be taking that across through to Lloyd's of London at some time in the very near future. Insofar as the futures market is concerned, Goldman Sachs, no, we have not yet gone there. That's the reason being, again, our focus has been at the moment India, and we simply do not have the kind of bandwidth to go there. However, having you've given us the idea, it is just set up on a thought process. Hopefully, in the near future, we will get to that point.
Well, one of the investors on this call has a very good, close connection with Goldman Sachs. I want to see if he's going to laugh.
I cannot see all the investors here.
Got it. Okay. No. So we have access through one of the investors to that market, if that's of interest. The fact that you're in Australia is interesting. given that we have lots of floods across our eastern corridor every couple of years and bushfires across pockets, well, again, have you considered the relevant state emergency services or the governments to say, hey, guess what, we may have something that's of interest to you?
Satish, I think this is where you come in, mate.
Okay.
Yeah, I guess we haven't tackled the governments yet. However, that is definitely on our radar. At the moment, within Australia, we are working towards doing a pilot product for crop insurance and dairy insurance. So we're currently working with an insurance broker and an underwriter to develop that product. And they also have links to Lloyd's and the UK as well. So once we get that product out to market, I think, and get some traction under our brand in Australia, we'll then sort of start to approach governments and so forth.
I think further to that, we do have a connection in that's going to be essentially recommending us to Twiggy Forest's accelerator that's looking at certain different NatCat dashboarding as well, including that early warning of bushfire. That's one of the things that we do have on our radar. It's just when is the most appropriate time, and while we're developing the parametric risk product, this is something that we wanted to pursue. We're just waiting for the appropriate time to make that connection again.
Great. We've got very good connections into the state emergency services across the eastern seaboard and also Fonterra.
Oh yeah.
If you want to get into those guys.
Yeah.
We know some of the leadership there.
Absolutely.
Thank you. Do we have any other questions? All right. Thank you, Team Mistio. Thank you for coming in today. If there are any significant interests and follow-ups, we'll get in touch with you.
Awesome. Thank you so much, guys. Appreciate the opportunity.
Thanks, Nick, Satish.
Thank you all. Have a good day.
Thank you very much.
Thanks.
Thank
Bye.
you. Bye-bye. See you later.
So we have one last startup for the day, and this is a phenomenal blockchain startup fintech. And I'll not say this, you know what, I'm so tempted to say this, but their future expansion plans are for Australia, US, and Europe. So I'm not going to say much. Ashish will give you 15 minutes in total. You have either 10 minutes to pitch and 5 minutes for question answers, or 12 minutes to pitch and 3 minutes to take the questions. It's up to you, and your time starts now.
Sure. Hey, hi everyone. I'm Ashish Anand, co-founder of Whirl. Whirl is a blockchain pioneer platform in India, solving the problems of commodity finance, which is a global problem, by the way, for the banking industry, and also helping create some of the sustainable livelihoods for the farmers in the process. We are India's largest blockchain platform as of today, globally the first blockchain platform for agri-financing, and Asia Pacific region's first and only blockchain platform for any sort of asset-backed loan. Rather, globally only the second one, with Figure blockchain being the another one in the US, which is into asset-backed loan space. So just before we go into what problem we are solving, I would just like to give an industry background. Commodity finance is a very innovative finance solution in which any commodity owner, for example, in agri-commodity space, a farmer, a trader, exporter, processing mill, in the metals and minerals space, for example, mines, miners, those who are into processing of metal commodities, etc. They all of these people, similarly in the energy space, the crude oil refiners, the crude oil pipeline agencies, etc. All of these actually essentially own commodities in the course of their business, which is a huge part of their balance sheet. And so what commodity finance does, that it allows them to monetize these asset holdings on their platform, on their balance sheet, by depositing these commodities in third-party warehouse, and then the banks lend against that. So that way, the supply chain financing works, while the inventory which these producers of the, whether the farm produce or whether the miners, etc., they have in the course of the business, that way they are able to reduce their cost. Also, it helps them into deferring their sales cycle, so they can rather use bank financing and sell their commodities at a right and the opportunity time, where they make the maximum margins. And that helps the businesses as well as it helps the banks that they have a secure lending portfolio. So what we are solving here, if this is the industry, what we are solving is the banker's problem
largely, and also to some extent the borrower's problem. And what are the bankers' problem? In 2020, this is a $200 billion industry across the globe. In 2020, banks lost $12 billion around that only in APAC region. So Singapore, Southeast Asia, Australia, etc. Banks lost around $12 billion. And that's not like one-time event. It keeps happening. If you look at last 10 years history, every year, hundreds of millions of dollars of banking fraud take place in this industry. For example, ANZ Bank lost $300 million in 2017 against fake warehouse receipts. Bankers like HSBC, ING, Standard Chartered, etc., lost around $9 billion in Singapore this year itself, or in the previous year itself, in the course of commodity finance. So that's the major focus. That is where we use blockchain to solve this fraud problem of the banks. In India also, it is the same problem banks keep facing. And by using blockchain, by creating the entire ecosystem on a digital lending platform, we also helps banks to create a digital ecosystem instead of a manual prevalent ecosystem, help them reduce their portfolio risk concentration, etc. as well. So as I mentioned, the frauds which we keep seeing is, one is that lending against duplicate or false receipt, like ANZ Bank lost $300 million there in 2017, dealing with Glencore. We solve them using blockchain, whereby the blockchain ensures that the receipts are immutable. They cannot be changed, they cannot be forged, they cannot be duplicated, and so on. Second problem, which is a major problem, whether it is a Qingdao scandal in China in 2014, or the Hinleon, Agri-Trade, etc. of the Singapore of 2020, multiple lending. Many banks lending against the same collateral. Using blockchain, and by getting on the blockchain where we have warehouses, banks, and the borrowers on the same protocol, what we ensure that there is no question of a multiple lending, because once a lending has taken place across the banks, across the network, it is reflected. So that way we are able to resolve that. And not only that, because the entire transaction happens on the single platform, so the cost of transaction, the time to transaction, the turnaround time, the cost of underwriting, all of that also goes down for the banks. And along with that, we have added certain tools for the for the borrowers, which help create a fintech lending application on top of this blockchain platform. And also, not only that, because these are blockchain platform generated receipts, these are essentially what is known as non-fungible tokens. You must have heard about non-fungible tokens quite a lot these days. We have been doing non-fungible tokens and lending against non-fungible tokens for last 2 years. So these non-fungible tokens can be traded across the globe. They can be sold, the ownership can be transferred in the warehouse itself without need of shipping the goods. The goods can be shipped later on at the instance of the buyer. So this is how our platform looks like. We have the borrowers connected here. They have a mobile lending app for their purpose of the lending. The warehouses are on this platform. The banks are on the blockchain platform. Other third party like a verification agency, audit agency, all of them are on the same, so physical verification being done. All of that comes on the same blockchain. Price of the commodity, because that is a determinant about how much loan can be given, comes from several sources, which we call Oracle sources. And this allows digital tokenization of the commodity ownership through an NFT, lending against that through the borrower app, and finally, a commodity trading platform. Right now, our lending app is active in India. Trading app, we are waiting for certain regulatory changes to make that active in India as well. So that's where we are. This platform is offered as platform as a service to different participants like banks, warehouses, borrowers, and we make money on transaction basis. So from the banks, typically we charge a percentage of lending amount as a platform usage fee. And also if we acquire the customer for the bank, we charge fee for that. From the borrowers, we don't charge anything because we charge the banks, but when our trading platform get active, we will be charging them a commission fee over there. So on a single platform, we have custody of the goods in the warehouse, credit from the banks, and also trading platform is coming up. Other ancillary services like logistics, etc., can be added on the same platform through partners. Where do we stand today? We are India's largest blockchain platform today. We have tokenized more than $500 million worth of commodities. And we have got lending partnership with banks, and more than 3 banks are active now. Within next quarter, we expect 2 more banks to join in, larger banks, and we have committed lending corpus of $300 million. We started lending 6 months back, and in 6 months, we have already crossed more than $2 million of lending on our platform. Within next 12 months, we expect $50 million of lending through our platform. Right now, as I mentioned, we are into warehouse receipt finance. We are taking it to decentralized finance as well. That's the next stage. In September, first week, our decentralized platform will be launched. So we will be using both NFT and decentralized finance along with that. Geographic expansion is something which is on our radar as well. We have partnered with OneLange in Australia, for example, for taking us to Australian market and Singaporean market. And we have also created partnerships in the US for the same purpose, for expansion purpose. And not only that, we can also use the same asset-backed lending platform for commodity finance to other asset-backed loans as well. The team, myself, I'm a chartered accountant, spent around 15 years in debt syndication, more than 4 years in blockchain. My 2 co-founders come with years of experience in the technology and the blockchain space. My advisors come from Silicon Valley, also from India in the banking side and financial inclusion sector. And finally, we are looking to raise a $3 million through our token sale. So our token sale will be coming up, as I mentioned to you, in the month of September, which we will be looking to expand across the globe, as well as to enhance our loan portfolio. So we expect our loan issuance to be around $1 billion in the next 24 months. And that is what we expect, that by year 6, we should be in a $100 million revenue target, including both warehouse receipt finance at the international level, along with that decentralized finance protocol. That's all from my side. Thanks a lot. Any question, we will be glad to answer that.
Thank you, Ashish. Thank you so much. You can stop presenting so that we can see all the speakers.
Sure.
Great. Yeah, James, I can see you have unmuted yourself. Do you have a question? Do we have any questions? James, I see you have unmuted yourself.
Sorry about that. No, I was just thinking, what a great presentation. What an amazing business you've got, Ashish. It's, how long have you been working on? When did you start?
We started in 2019 building the platform. The platform got ready by end of 2019, and 2020 we started the first pilots. So 2020 the pilot started, and by December 2020 we started our lending protocol.
It's an amazing amount of work. Congratulations.
Thanks a lot.
Perfect. Yes, Dr. Chris.
Ashish, what are your plans moving forward in terms of the company? Would you consider listing in 2 or 3 years? It sounds as though you've got a magnificent platform to have that exit available as well, but also to use it as a leverage for accessing big dollars.
So first part is that right now we will be listing our tokens right now within next 6 to 9 months on a decentralized exchange. So that's the first part which will come in the public market. So we are doing a private sale right now which will run from September to November. And after that, within next 6 months, after 6 months of that, we will do the next listing of the token. So that will be the first thing which we will do. On listing the equities, we believe that it will, we are looking to do that after, say, around 5 years time. Because we believe that while we have got good traction in terms of getting the network leverage, GMV, etc., for going to public markets, it will be better if we are in the range of around $100 million of revenue or so, and then we list ourselves. In between, so we are looking to raise by next 9 months through our token sale around $15 million. That's the thing. And after that, the expansion will come through equity sale through VCP route, and then we will look at listing in 5 to 6 years time.
Do you have any strategy for entering the US? Because that would be a very significant market, and there might be big banks like JP Morgan, I know, are very interested in supporting businesses like yours substantially.
So, yes, actually speaking, we recently have been part of a Boston-based accelerator called Mass Challenge. And through them, we have been in dialogues with several larger banks, including JP Morgan, ING, and a couple of European banks who have business in the US market. So that is certainly a market we are looking at. 40% of the commodity finance market is in those in the USA, in the Northern America.
And you should also, we've got friends in Blackstone, if that's of interest to you.
Sure.
They would love, but this is the bigger play though. You know, they'd love to put in the $500 million expansion.
No, so you are very much right. What has happened that all these frauds have pushed back. So most of the commodity finance lending has traditionally been done by European banks across the globe. And they have been pushed back because of all these and they have pulled out of certain markets as well. So these funds, especially the hedge funds like Blackstone or someone like even Goldman or JPMs through their vehicles, they are actually coming in a big way in commodity finance business. So that will be an interesting discussion to have with someone like that.
Have you even spoken to Credit Agricole?
No,
the French guys. Okay, no. Okay, because they're always having troubles like this.
Actually, I mean, you are very much right. Almost every European bank has suffered from this, and we believe that blockchain helps solve their number of their problems into this space.
Very good. Thank you, Ashish. Great opportunity.
Dr. Krish.
Thank you, Dr. Chris. Thank you, Ashish. Do we have any more questions? All right. So if you do not have any more questions for the time being, Ashish, we will get some interest forms from the investors, and we'll let you know for any more follow-up rounds or questions.
Sure, Sumit. Thanks a lot for inviting me.
Thank you, Ashish, for coming in. Thanks so much.
Thank you, Ashish.
Have a good day. Bye-bye. Right. So thank you so much, Dr. Chris. Thank you so much, all the investors, gentlemen, for being here today. With that, we come to the end of the session. We had planned for 7 startups, but one could not come in, probably some sort of emergency. But we hope for the next round they would be, available of sorts. So Debashish, over to you. If you have any closing remarks on this.
I think first of all, thank you so much for hearing our startups and listening to the kind of solutions they're bringing on board. We will continue to stay engaged with future interesting technologies which will come our way, and keep you updated on this. We will be sharing, Dr. Chris will be sharing a form after this. We would like to know your interest level in taking the conversations with the individual startups forward. If you fill up the form, which will be primarily about which startup you're interested in and a preferred time to catch up, then we'll organize a call with a slightly more deep dive, and we will take it to the next level. Thank you so much, gentlemen, for coming. It's evening, I know there, and stay safe. Thank you so much. Dr. Chris, over to you.
Thank you very much, Debashish. Back in the old days, we'd probably head off to the pub. But alas, being the Australians, not even a glass of wine, not even a beer, lockdowns got us.
Yeah,
I can go to the lounge room.
I was about to say that, but then I realized that it's a lockdown scenario.
I'm sure we'll be fine soon.
There's just a point. One of my friends who couldn't make it here today would be interested in seeing the video from this. Is there a chance we can get him to have a look at it?
Absolutely.
All right. I'll get him to contact you through Chris.
Of course. Thank you, James. Great. So again, thank you to the investors. What we've seen is a kaleidoscope of strengths in technologies, access to different markets, some of which we've never seen before, even as concepts in Australia. But again, part of what Mainstage does is introduce opportunities that are not homegrown, except for one today, but which have scope across several continents. So we get to see stuff that some of the big boys on Collins Street don't get to see. And that's the strength, one of the strengths that we have here. And the fact that we're able to also attract revenue generating businesses means that they're not really early stage as well. So again, I'd also like to thank Debashis, Sumit, Vishnavi, and everyone else involved with the Mainstage group, Midhum. We're going to be putting on events regularly. Some of them will be focused on startups looking for money from other parts of the world. Others will be startups looking for money from this part of the world. So there's also an opportunity for you as investors to engage with a broader investment community as well. So not just about opportunities, but also about money in different parts of the world as well. So with that, thank you all very much. Thank you for the organizers, well run, and look forward to continuing discussions very soon. Thank you.
Sure. Thanks very much.
Excellent.
Thank you.
Thank you, John. Fantastic.
Take care.